The price of Velvet looks pretty much like a hockey stick. Everybody gets crazy about the asset, and that's for good reason. We have an integration of traditional finance assets on Velvet now. We can bet on various assets like Nvidia stock or oil on the Velvet platform directly. And so the fundamental question is this just yet another pump and dump? Or can we take advantage of this rally? In this video, we're going to look at the on-chain data. We're going to figure out who's buying, who's selling here, and whether or not it still makes sense to buy Velvet. How high can Velvet go from here? Because obviously the performance in the last week has been outstanding. Velvet is now among the top 100 cryptocurrencies in terms of market cap. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of altcoin. My track record is public. It's on the website down below. It gets automatically updated. This is since I started publishing my trades in real time, so 2 years ago. On average, I made 5.1% per trade. The average holding duration is 27%. We currently have 6 positions open, and this is the record. But more on that in a second. I just want to start this video showing that I'm completely transparent in what I'm doing when I buy and when I sell. Now here's the announcement. Velvet has now integrated with Trade.xyz. And so while the platform markets itself as being an AI-driven platform, the fundamentals are very much comparable. So for example, here we can trade Nvidia with a leverage of up to 20x based on XYZ. Now the open interest is 155 million. This is not just coming from Velvet. This is coming from XYZ. XYZ is pooling the open interest because check this out. This is hyperliquid, and here Nvidia has the exact same open interest. So Velvet is just another gateway to those assets. Now on Twitter, we see very skeptical voices. Apparently, this is a scam style rally, and it's comparable to the Beat token that, by the way, we also covered on this channel a few days ago. But then there are others that are actively working on pushing the price higher. For example, through a listing on CoinMarketCap. There is a vote mechanism on CoinMarketCap, and we are getting very close to reaching the required 10,000 votes. There are 3 days left. The likelihood that this will pass is very high. Now, why does this matter? It matters because whenever a token gets listed on another major exchange, we have more liquidity access. Thus, the price tends to go up quite instantly, actually. By the way, if you're using X, formerly known as Twitter, feel free to check out the account of this channel as well. I publish statistics on various cryptocurrencies regularly. Make sure that you follow the right account though. So that's @BitcoinStrat. Don't follow a fake impersonating account. And so here we are, close to $1.80 per Velvet token, which translates to a market cap of 750 million. Now, who is the biggest competitor? That's of course Hyperliquid. Hyperliquid has a market cap of 15 billion. Now, I'm not saying that Velvet will flip Hyperliquid anytime soon. But what I am saying is that those kinds of rallies, they can get into the billions. Even random pump and dump schemes, even random meme coins, they can hit 2 billion, 3 billion easily. So there is still some upside potential, even if we were not to believe in the asset long term. Let's check out the on-chain metrics. So we've got one version of the token on the Binance Smart Chain with 14,000 holders. We've got another version on the base chain with 6,000 holders. Check out the number of holders over time. On the left side, we see the number of wallets that's now on the Binance Smart Chain with at least 1,000 tokens. So that's the average retail investor. The number of retail investors did not necessarily go up. In the middle, we've got the number of wallets with 10,000 tokens. And on the right, we've got the number of wallets with 100,000 tokens. So clearly, the whales are loading up on Velvet. It's not the average retail investor. So that's for the Binance Smart Chain. Now here is the same for the base chain. There are not that many whales on base, only 3 right now. Again, compare this to the Binance Smart Chain with close to 80. And yes, there are a few retail investors that bought, that have 1,000 token, so that's less than $2,000. But it's not really meaningful, right? Those are 20 wallets. Instead, what is meaningful is the bets on the price. There is a lot of leverage building up in Velvet. So most people don't get their position on the chain. They simply bet on the price via the Perpetual futures. This effect is massive for Velvet. In the last 24 hours, we only saw 18 million worth of trading volume on the spot market on Gate.io. Compare that with the Perpetual futures market. Here we had more than 2 billion worth of trading volume. So 100 times of what's happening on the spot market. Really, the Perpetual futures market is where everything is happening right now. And interestingly enough, despite this massive rally, the funding rate for Velvet is still very much balanced. We would expect that when a rally like this happens, that all the shorts are getting liquidated. So all the people that are betting on falling prices, they lose all of their money. And thus only the longs are left. And thus the funding rate, it should turn massively negative because many longs versus not so many shorts. That means the longs have to pay the shorts on average. This is not what we see for Velvet. The market makers are clearly active in the token and they balance out the funding rate. Yes, we did see some liquidations on the short side, but I don't think that this is a short squeeze. Instead, this is a push triggered through leverage. The trading volume on the Perpetual futures again went bonkers. It's at $2 billion. It's probably going to be higher tomorrow. And the open interest is at 150 million. Now, 150 million is an important number here because we have to put this in relation to the market cap. The market cap of Velvet, it's at roughly 700 million. Now, if you've ever traded a very narrow, small token, you might have noticed if you just buy $1,000 worth of that token, the market cap goes up by much more than that. By 10, 20, 30 times. Now imagine, instead of buying the token directly on the spot market, you are now buying the token through leverage on the Perpetual futures market. Suddenly, with $1 of investment, you can move the price by 100x potentially. The market cap is very sensitive to levered bets on the Perpetual futures. 150 million of perp bets on a market cap of 700 million is a lot. Fundamentally, this means the following. The market makers probably now have the majority of the tokens. The big whales, they own Velvet. Now, at the same time, they see what's happening with the retail investors on average. Is retail betting on rising prices or on falling prices? If most retail investors are critical of this rally and they think this is just a scam and they are betting on falling prices, the market makers will simply buy up more of the supply on the spot market. It doesn't take much money to move the price around, and then the liquidations following that will more than overcompensate those purchase fees, especially if you already have a lot of the supply in the first place. Now, I always try to figure out the best trading rules for an asset. So that's this Bitcoin Strategy Analytics. This is the backtesting platform of this channel. There is Velvet. And I tried to figure out, if we look at the best moving average for Velvet, what historically worked the best? The answer is the 61-day simple moving average. So this is where we are right now. We are, of course, above that moving average, but Velvet would still be bullish even if it fell by 90%. So this is a very much a lagging indicator. In the past, after such a pump, we just went sideways. We didn't directly come back down. And that's a potential risk. If you are betting on a falling price right now, it might be still too early, especially given that the market cap is still nowhere near a potential top. I always like to use those kind of backtests for my altcoin trading. That's why the history looks the way it is. I simply use the approaches that historically worked and then apply them for the future. For example, here, when we shorted the Luna Classic token, we had quite a massive rally 1 month ago in Luna Classic as well. We did the backtest. We then entered when there was a death cross. So we see that over here. Luna Classic continued to go up, and then at some point it stopped rallying. And that's then when the best moving averages, historically at least, they then gave a selling signal. That's when we started to short Luna Classic. And it does make sense to wait until a rally like this slows down. Then subsequently we closed that. That was when we got the golden cross. So that was a few days afterwards. And so every single trade that I do is announced live in Telegram. Of course, not every trade makes money, but it's the long term that matters, right? It's the average over time. And I don't think that many people are willing to share their data, maybe because it doesn't look as great. Plus 5% profit without any leverage over a sample size of 176 trades with a chart that looks like this. I don't think many people can present similar numbers. If you don't like to manually copy trade, there's, by the way, also an automatic copy trading vault. So last year that made 44%. So that's the annualized number. We started in the middle of the year. So far this year we are at 26%. I'm targeting to get the 44% again. For the copy trading pool though, you need to be in the annual plan. So that's clearly for the people that don't have much time, but they do have capital. If you do have some time, but not as much capital, probably the manual copy trading makes more sense for you. It's all linked in the website down below. It's currently $125 per month, and there is a 7-day money back guarantee. So in case you don't like premium, just email me over here within the first 7 days and I'll refund you 100%, no questions asked. So yeah, there is a lot of short-term leverage building up in the Velvet token. That does not mean that that has to delever very soon. This is a game versus the market makers. If you do the same thing that most other retail investors do and just call this a scam rally and you're betting on falling prices right now, there's a good chance that you're going to get wrecked. Very likely the trend reversal will happen when nobody talks about Velvet anymore, when something else has already rallied, when all the attention has moved on. When it's not the obvious trade, that's when we want to potentially bet on the deflation of the price. Right now, I think that's too early. Right now, I think the price can easily double and triple from here. The market cap is still not that high. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. The premium link pops up here on the screen as well. See you next time. Cheers.